And now, ladies and gentlemen, it's the last element of our morning program. It's a panel again. It's a very special panel. We have invited the top experts from the top data centers in Europe. And we have found somebody willing to manage all these Dutch people, because it seems to be a Dutch profession to be an expert in data centers. So I would like to ask Mr. Jonathan Atkin to come to the stage to help us through these coming 25 minutes. He's managing partner at RBC Capital Markets, so most welcome and take a seat. And then next to the stage, I would like to invite Dick Teunissen, who works with Edge Connex. Most welcome. Jan-Pieter Anton from Digital Realty. Mr. Eugene Bergen-Henegouwen, that's only for Dutch-speaking people. He's the president of Equinix. He's coming from the left-hand side. Most welcome. Nice to meet you. And finally, Mr. Erik Boonstra, who is from Iron Mountain Data Centers. He's over there. So, this will be a panel about trends in data centers. So here we get a view into the future. And I'm most looking forward to this. So please, go ahead.
Great. Thanks very much. So I'm going to dispense with introductions. I think when you answer the first question, you can give a brief overview if you see fit, but I think you're all very well-known people in the European data center landscape. And I'd like to provide just a quick overview, underscoring a lot of what the CBRE speaker kind of talked about. And from where I sit in kind of my perch as leading the global investment research effort in communications infrastructure, data center demand quite strong. Even though you see cloud revenue growth slowing just a little bit, it's still growing. It's growing by double-digit billions. And for those of you that might have been at PTC in January, it was very, very clear that the likes of Oracle, Microsoft, Amazon, Google, and so forth, driving very strong demand. There's a little bit of, within the social networking vertical, I would call a speed bump in terms of demand, and we've seen some of the public announcements of the cloud providers, as well as some of the other hyperscalers talking about their CapEx budgets, still very, very strong. And no sales director or CEO that I know in the industry seems at all concerned about their sales pipeline. Equinix and Digital Realty both reported their results last week, seeing very strong demand trends, seeing very strong pricing trends. And as earlier mentioned, I think we're kind of getting into the triple digits in terms of euros per kW around pricing. It varies by market, obviously. Supply chain constraints beginning to ease a little bit. Labor, it's kind of a mixed picture depending on where you are in Europe, in which city, but overall fairly strong. Within the M&A market, and I think we'll hear more about that later, we're seeing still a lot of activity, a lot of elevated multiples, despite higher financing costs. And an interesting dynamic around energy availability where it is becoming tighter more frequently in more markets. It depends on what time zone you're in, but I would say that the ability to get permitting and power in major metros is becoming a more consistent challenge, and that has some interesting implications for pricing that we might want to discuss on the panel as well. So with that, I think maybe let's talk a little bit about the macroeconomy, and given some of the economic pressures that various sectors of the economy are seeing, how is that translating into customer decision cycles? First, I guess I'll ask Eugene from Equinix and then JP from Digital Realty to talk a little bit about how the macroeconomy is affecting the commercial cycles.
Okay, John, thanks. Actually, we see three phenomena that I think that are really important for all of us to understand, and that are actually very much supporting Paul's story of CBRE. We predict an unequaled growth in data centers, and the three phenomena are the following. When we talk to enterprises, they verbatim talk about what they call a cloud hangover, meaning they had very ambitious plans to move everything to the public cloud. And I compare it a little bit with building a house and using a hammer for everything you have to do. Public cloud is great, but it's not great for every workload. So what we see is that workloads that are more stable, more predictable, actually don't belong in public cloud. So we see Still very strong growth, to your point, in hyperscalers and in public cloud, but we see that there are also clouds moving back to outside of the public cloud. And then there's two mega trends that are going to be a very important factor for the growth of data centers. Number one, the power price crisis. Because when we heard what power price increases were going to be, we were shell-shocked. But then you have to realize what that does on the enterprise side. Because with PoEs of Equinix between 1.2, 1.4, compare that with PoEs of on-prem that are 2, 3, 4, it means that their power bill has exploded. Thirdly, we are big supporters, by the way, all of us, of what the EU is preparing in terms of legislation on sustainability. Basically, it boils down to that the more sustainable your data centers are, your IT infrastructure, the better you are off. The better interest rates you will get in your loans, etc. That will massively drive the 50% of IT infrastructure that is still on-prem to off-prem. A good chunk of that will go to public cloud, but clearly not the more stable, more predictable workloads. And we predict that that means there is going to be a massive acceleration, actually, of data centers. And frankly, that's really good news for sustainability, because we're wasting a lot of energy on on-prem IT infrastructure that we can obviously move to data centers and to public cloud and serve society in a big way.
Yeah, so I think I provided my answer to Eugene before the meeting, because he actually gave the answer approximately according to the same lines I would do it. Look, on the EU and the sustainability question, I think we're going to talk about it a bit later, but I think it's a really important subject, and it's so important for our company at this point in time. We need to influence that gremium together. We need to influence the public opinion together to build a strong future for our business. The interesting part of the conversation with the EU is, and Eugene and I were both represented, supported by many others in one of those meetings, and is when you ask them where they look at this point in time, they look at large-scale data centers. Think multi-megawatts. But actually the point Eugene just raised earlier is that the majority of data is not in those large data centers. The majority is still in small data centers that enterprises hold themselves. That's where the high power usage is. That's where they feel the price increase of power. And that at a certain point needs to migrate, because it's good for all of us. And I don't try to sell my business here. I think it's just good for the future of this world. Let me stop here, yeah? And let you go to the next question.
It's an interesting point, John, because when we talk to the policymakers and discuss our permits and everything that goes around it, we have these discussions. We discuss with national governments, with provinces and whatnot, that the on-prem data storage and digital infrastructure is a huge drain on all of these resources, and then actually bringing it to us, but is a way to be more efficient. It is hard, to be honest, and I'm saying this with a smile because I'm sure the other guys are suffering from this too. It is hard to bring this argument right, without selling your business. But it is absolutely real.
Maybe turning to the question, and we will talk a little bit more ESG kind of practices and so forth. Maybe Eric, maybe if you want to take a kind of stab at just the macroeconomy, which is the original question, and how that may be affecting customer decision cycles.
Well, the funny thing is, so the economy is slowing down, right? It looks like inflation, power pricing went up, all that stuff. But what I see is, you know, everybody needs data. Data keeps on growing. I don't see an impact as we speak. I saw a record year for us last year. Also next year and the years to come, look at the reports, right? It's all hallelujah. We will grow. The data center business will grow. But I think we are facing other challenges that are bigger, right? So I think to keep pace, right, we need talent, we need people. I think that's a big worry. Also authorities in some regions, it looks like authorities don't like us, right? That's obvious. Black boxes use a lot of power, not a lot of employment, so people don't like us, it seems, especially over here, by the way, in Amsterdam. So I think a couple of challenges we have are that are bigger than the economy, because what I see is despite the economy, things go very well. And if you look at the pipeline, if you look at all the investors, I talked to a lot of investors lately, there's billions of dollars just for Europe to deploy, right? They want to invest, they want to build. And I see a whole new market coming up, the tier 2 market. It's always about flap, right? If you look at the presentations, everybody spoke about flap, hyperscalers, but there's a huge market, I think, below the hyperscalers, but also a huge market in tier 2. That's why we invested in Madrid, for example. And there will be other regions coming up, and we'll be growing towards Paris size, I think. And you will see a natural growth of other cities around Europe.
So one thing about the industry is that some of your biggest customers also build their own capacity. How are you seeing? None of them are here on this panel, and to my knowledge, not really represented, at least on the panels at this event. But to what extent are you pursuing these public education and with policymakers around the environmental challenges alongside some of the hyperscalers as well? What kind of progress are they making? Or are they pivoting maybe less towards building and more towards using yourself? How do you see that happening on both the policy front and then mix shift? Starting with Eugene, you can maybe speak on behalf of Xscale and then JP.
Yeah, it's really interesting, actually. The hyperscalers, I think, are truly front runners on the sustainability side. At the same time, you should ask the same question to the EU, what they think about them. Because they're a lot less enthusiastic about the hyperscalers, because they say they basically try to delay legislation, try to frustrate it, try to buy time, you could also say. But at the same time, one thing is that they like I said, they are not really cooperative with legislation. They are definitely pushing the boundaries on the sustainability side together with us.
I mean, they have a more uniform architecture. They're building larger campuses. They have the advantage of having lower PUEs. They can be in the Nordics, where latency is less of an issue, where you're unlikely to develop. Any perspectives from your side on...
Look, all of this is true. And we see hyperscalers building more and more themselves, in general. But I think over the last month, we have spoken to all of them, as we always do, by the way. And in all these conversations, always this topic comes up. And it's always, okay, what are you going to do? Self-build, third party. And the answer is always the same. Every year at the beginning of the year, all these hyperscalers sit around the table and discuss what they're going to do that year. Or hopefully they have a little bit longer prognosis than that. And they have, by the way. But the answer is always, this year we're going to build more ourselves than we're going to do with third parties. At the end of the year, they look back and they figured out they didn't do it. They face exactly the same problems as we face, only this is our business. We know exactly the insides and the outsides. We know how to deal with the governments, with the permits, building it in time as far as we can with all the challenges that are here today. And I think that has made us so powerful in this business, and therefore we play this important role.
My observation would be that there's a little bit of a pivot more towards leasing, more towards less from self-build. A lot of these tech companies have had layoffs. As you mentioned, their core competency isn't building data centers. They certainly have the balance sheets to do so. But on the back of a large commercial or government win, when they need the capacity immediately, they're more likely to want to lease. It obviously depends on the market.
I would also add, John, that let's be clear. There is a very distinct difference in the applications that go to a hyperscaler large builds compared to, for example, what is deployed in Equinix. Equinix is basically, you could say, the base for large enterprises that want to go to many places. If you compare that with a large build of hyperscalers, that is more like big computes. So you could say there's a lot less connectivity density. If you compare an Equinix with a Microsoft, then we are super dense in terms of connecting enterprises to hyperscalers, to networks, etc.
One thought that comes to mind with respect to the hyperscalers and their ability to kind of deal on the policy angle fairly successfully in Asia, there's a a number of data sovereignty initiatives that might require somebody like a Meta or a Google to deploy their compute, in country. But I think what we've seen is they're able to slow roll that process fairly successfully. And if they see the need to centralize their infrastructure and deliver it more efficiently in that manner, they generally have been able to achieve that. Maybe turning to the 20% of the market that as CBRE recognized is not hyperscale, and that would be retail and enterprise. Is that becoming a less competitive market that allows you kind of a bigger swim lane, for instance? And
I would turn it around. The large deployment is an even more competitive market. How's that?
Agreed. Yeah, okay. So you kind of answered the question indirectly. Eric and JP, you guys have businesses as well that aren't hyperscale centric. What would be your perspective?
I agree with my neighbor here. So what I see is, as I just said, right, so I think this market is extremely interesting, the whole retail market. I see it's growing. I see more and more demand coming from these kind of companies, banking, government, software, that kind of companies. There's so many global companies that are not hyperscalers that have an interest and want to grow. And we see a growing demand in capacity. So a lot of, 0.5 megawatt, 1 megawatt, 2 megawatt deals. And so it's a growing, for us, it's a growing business.
So Dick, your company is owned by private equity. The way to move capital is to do the big deals. So is that a segment of the market that you have the luxury to focus on? Or are you so busy with big deals that it's a little bit less of a focus?
Well, I wasn't necessarily going to agree with Eugene that on the enterprise market there is less competition than on the hyperscale market. I think the stakes are just bigger, and so it has more visibility across the entire company, including our shareholders, wherever you move, right along with your customers at that stage. I think there's certainly truth in what was said earlier about tier 2 markets, or still, right, large capitals around Europe, where we see AZs being deployed by the hyperscalers from lots of perspectives, wanting to be closer to the end user, GDPR regulations. They move around their workloads, right, currently as they see fit. Yeah. And as they are, large-scale users, I think at any stage will want to own and operate their own infrastructure. They think they can do it faster, they think they can do it cheaper and better. And then at the beginning of the year, right, after all the capacity planning, the reality kicks in. And I think, we clearly have the benefit of looking at the spectrum of customers across the footprint and taking all their inputs, right, and understanding which markets, right, are moving in what direction. And so that helps for us to make business cases to divert risk, right, not on a single customer, but just simply on a shift of demand, right, moving to a market such as Madrid or Milan or what have you.
So,
look,
JP,
for us, look, our company is built on the foundation of connectivity. And that's where always has been the basis of that, for sure in Europe. And for us, it's really important to have the right mix. On the one hand, we want to do business with the service providers, that in the other hand, support the enterprises on the other side, and be that meeting place where both of them come together into our data centers. We see there is a healthy market for both sides. It's a different market, there are different challenges, but it's on both sides healthy.
So I'd like to turn to energy as a topic that's come up in nearly every presentation before us, and obviously highly volatile. Who knows what the future might bring, but Equinix and Iron Mountain in particular, I think you've had some communications with your customers throughout last year because you've been driving through some increases. I think maybe less the case for you two companies, given the pass-through dynamics of how you price for power. But what has been customer reaction to that reality, starting with Eugene and then Eric?
An honest, oh, sorry.
Go ahead. No, go ahead.
You want an honest answer, or?
Right. Please lie.
I would lie if I would say, right, they don't care, right? They were all fine. That's not true. But I believe in transparency, so what we do is we're totally transparent. We say, right, this is our cost. It's not a product where we make money out, right? So we have to transfer the cost we have to the customer. And yeah, most of customers, you know, they don't like it, but they understand. And of course, there's some customers, and I think you mentioned it, right? So some customers have problems with that because they have to transfer it to their customers, but have contracts which doesn't allow it, or so they were confronted with huge additional costs. So I understand, right, that a couple of customers have a problem with it, but I think in general, I think it went fine. So we transferred the cost we had to the customers, and it worked out.
Yeah, I think it's also really a matter of, we learned from the past that it is all about communication. What I mean by that is, if you announce in December that your cost goes up for the next year, people are not too happy with that, because we all have budget cycles. So we decided to very early on communicate ranges. And we were really lucky that we ended up at the low end of the range. That always goes down really well. I will add another element. There is something called hedging, and I guess it's for all of us. We buy so much power, so much energy, that we have what I would almost call a think tank of incredible smart experts who are managing the hedging of power. So even if you would forget everything in terms of cost, etc., Equinix had to pass on this, I can't mention numbers, but very substantially better increase compared to if we would not be able to do that.
What's been interesting is even last year, Microsoft and I think one of the social networking companies saw a hit to their margins because of energy. Because as we all know, one of the biggest operating costs of the CSPs is energy itself. And they see this as such a land grab environment that they can't raise pricing. So they took the hit. And you can see that in some of the results.
But you know one thing, John, because I'm really passionate about it, we have to understand in my book that what happened with power is an incredible opportunity for society. Because more than ever, enterprises got to the realization how much energy we are wasting. And that's because of PUEs. But when I met a customer, they said, have you guys ever thought about, are applications being designed to consume as little power as possible? And the answer is largely no. So there's still tremendous gains to be made that I think are triggered by the fact that power prices have exploded. I see it as a wake-up call for all of us that is going to benefit society and sustainability in a big way if we capture that opportunity.
JP, I think.
Yeah, I had the same point, so he caught my breath. Go ahead.
Got it. Maybe so much is going right around pricing, renewal spreads, as your own executives have kind of commented last week, are heading positive. If you look at kind of same store cash flows, that's going higher. A lot of that is because of tight supply, tight inventory. And yet financing costs have gone a great deal higher, and we may hear about that in one of the afternoon panels. But as you think about a new project and the returns that you hope to get out of that, the spot pricing is going higher to compensate for the higher build costs, but is it going sufficiently high to offset higher interest rates? Anybody have a view on that? Maybe start with Dick.
Well, it should, because otherwise there is no long-term business, right, for us. We suffer right from the yield compression. All of us do. There is no escape from the raising interest rates that are increasing the cost of money. They are affecting the debt-to-equity ratio, which doesn't help. Right? And then on the other side, there is all of the increase in labor cost, material cost, right, aside from the delays and whatnot. And so this brings it actually back full circle to some of the discussion we had earlier in terms of, right, our customers building their own. Obviously they are, right, their own teams are very well aware of exactly what we are suffering from. Except when we speak to the people who buy the capacity from us, right, obviously they are keeping their foot very strongly put onto the floor, right, in terms of not wanting to accept higher prices. I do think, though, that, and I mean, with great support, right, of some of the public statements that Equinix and DRT have made recently, they do start to realize, right, that if they want a service provider that is still going to be around, right, in 10 or 15 years when their contract is still going, but that they need to accept to pay, right, a price that allows for an economic model, right, that has a longer duration, right, than next year. So. It is it's a cat and mouse game that certainly I think has matured over the past 12 months. With inflation right, slowing down again, it will make the debate I think only harder because the things that we can play in contracts right are mostly duration, right, price point duration and escalation, and especially that last factor right is always a topic of lots of discussion.
If it would drive that much customer decision-making in the end, why do you think that in the 23 cities in EMEA, the digital realty is present? We're building in all of them, or have plans to build. When you look to our capital expenditures, year over year it goes up. We're going to spend more capital this year than we did last year. I think that shows that this business is growing, unless the challenges, despite the challenges that you just talked about.
So I think somebody's going to come over my left shoulder and tell me that
so
we're out of time.
He's not here yet.
Europe versus rest of world, maybe quick sound bites. You all work for global platforms. What is it that you need to kind of educate your superiors around the European opportunity versus APAC versus Americas?
Always get more money, of course. But now we have launched in Nigeria, Côte d'Ivoire and Ghana, and we have announced a big investment in South Africa. We're going to expand dramatically in Asia and in the US. So I think it's going to be actually one of the highest capital investment years.
Yeah. Europe versus rest of world.
Yeah, so for us, Europe is as much as important as Asia is and North America. So we have big plans for Europe. There's a lot of potential. As I said, the tier 2 markets will flourish. So there's a lot to be gained, and so we'll do a lot of investments in Europe for the next 3 years to come.
Great. Barring any different answers, I think we will conclude the panel, and
No,
I thank you all for your
it's about the
participation.
same.
Yeah.
Great job on timing, by the way.
Yes. Well, the conclusion is it will not be big, it will be huge. Very good. Thank you so much. Thank you also for your moderation. And on behalf of all of us, thank you so much for sharing your views on the future of this sector. And I would say, hope to see you soon back again.